organized players, be it's a business where the dependence on commodity prices, atta, chawal, dal, is extremely high. How are you planning to differentiate? Because that's one space where you're really scaling up all your brands and all your portfolio.
Nikunj, when you say the India foods business, I would say, we've got a very solid salt business where if you take put together all the different brands that we have, and we are going to expand the offerings in salt also as we go forward, we're close to 38 share. 38 share and very decent margins, I would say. I mean, almost top and best in class in the foods business. On the other, I would say we still have long way to go in building decent positions. But as we build those decent positions, I think 2-3 critical pieces that we've got to watch out for. Enter categories with scale and make sure that the products you're entering with have got decent gross margins built in. Because if you've got to build either a category play or if you've got to build share, then you've got to have enough firepower in terms of margins which can afford good branding, advertisement spends to grow. So that is where we'll go. And I'll give you an example of where we've executed to that. And this is the inorganic piece, Soulful, right? I mean, we saw an opportunity to enter a space where we were not present. And we went and acquired Soulful. Soulful is very, very healthy gross margins. It's a differentiated play. And therefore, we think we can build strong businesses. But if you enter a commodity, as in without a differentiation, you will not have margins, and therefore, like you said, you'll struggle to play there. So whether it is in even the near commodity plays that we have, like pulses, we only play in unpolished dals. If I were to go for scale, I would go with the polished, but if I go with polished, I will have no margins, and that's why we stayed away from that.
Has the international business, Sunil, stabilized, especially the Tetley business?
Well, absolutely. The international business, I would say Q1 took it on the chin this year, because last year they had this huge advantage of pantry loading, right? The pantry loading phenomenon was much more in the developed markets than in India. And they went through this high. Q1 was the high, Q2 a bit of tapering off, and Q3 onwards was normalized. So you did see a huge hit on the overall top line of the international business last quarter. That was in Q1. Q2 was relatively flat. While the reported numbers are negative 6%, overall the international business is plus 0.4%. And the reason for that is because last year in our base, we've got 2 businesses which we divested. The food service business in the US and the out-of-home coffee business in Australia. So broadly, it's come on to par. And while it's come on to par, the bottom line has improved. Like I said, EBIT margin is up to 14%, which is a recent historic high. So we feel very good about where we are in the international business. And the other thing we feel good about is this year we've brought in all the brands together and started executing what we call the 3-brand strategy. So for example, in the UK, we've got Tetley, we've got Good Earth, and we've got Teapigs. And the reason we are going with a high focus behind Good Earth and Teapigs is because we need to move our portfolio from just being black tea into a larger tea play. The growth is happening in specialty and premium, and that's where Teapigs and Good Earth comes in. And we are seeing Teapigs and Good Earth starting to contribute in top line as well as on the share front.
You know, I have to turn my attention to the market just to show that what's happening in terms of the sell-off. And the selling in some of the mid-cap stocks has just, it's now becoming excruciating. If you bought, let's say, IRCTC 15 days ago or 10 days ago, it's a fall of almost 35-40%. For a 6,000 rupee stock now, IRCTC is now threatening to go below 4,000. That's the reversal what we've seen. IEX, again, a very, very sharp reversal. Tata Power, Tata Consumer's not gone down, but you know, across the board, I guess the selling has only intensified. Be it FMCG, with the exception of ICICI Bank, I guess you know, the entire market is in a state of flux, so to speak. Sunil, a lot of Tata companies are going through a serious policy change in terms of capital allocation. We just got news over the weekend about how Tata Chemicals is looking at selling one of their big acquisitions of soda ash in US. Are you looking at also selling and exiting some of your businesses which the company acquired in the previous cycle?
Nikunj, let me just say, geographic and product portfolio is a screen which you check through from time to time. Right now, where we are is we've got a strong international business. There were pieces of the international business which did not fit in, like the coffee business, out-of-home coffee business in Australia, the food service business in the US. Those we've divested already. And also we've defined the 3 core markets which we are going to play in, which is UK, Canada, US. As I said, right now, decent share positions, decent top line growth from an international perspective. Now, of course, you can't compare the growth compared to India, and steady cash flow generator. I mean, that's the role which international plays. They're playing that. So for now, I mean, we are in the international business. In fact, if anything, we are looking to cost optimize to make sure that we've got more firepower to spend in the international business.
When we spoke last specifically about Tata Coffee, you said, look, it's work in progress. The board has not taken any decision on how to really, whether we should keep Tata Coffee listed or should we merge that with Tata Consumer. What is the status on that? Is it still a work in progress? Have you conclusively decided whether Tata Coffee will remain listed or will eventually be merged?
Nikunj, my answer remains the same, work in progress.
Okay, you're sitting on a cash of about 2,700 crore. If your ambition is to take your return ratios higher, with such kind of a strong cash on your balance sheet, how would you be able to achieve your targets of return ratios? Because cash on balance sheet will be a drag. So either the cash has to be given back or you will have to acquire something.
No, Nikunj, you're absolutely right. If the intention of generating better cash, and like I said, this quarter, for example, we've improved working capital by 16 days versus last year, from 57 to 41. Or every other lever in the balance sheet, in the cash cycle is being looked at. Free cash flow to EBITDA, I said last year was 65% for the quarter, this year is 82. So we are focused on generating cash. And the reason for generating that cash is not to sit with the cash. Last year we did increase a bit of dividend. But going forward, I would say we are looking at aggressive growth, both organic as well as inorganic. The only thing, inorganic growth comes with a rider, as I've mentioned earlier. It has to pass muster both on the strategic framework as well as the financial filters. Only then we will move in. Nikunj, at any point of time, we are always evaluating 4 to 5 opportunities. The only problem is what we like is not available or doesn't want to play, and what is there to play, we don't like the metrics. So, but this is work in process. Acquisitions, M&A is never, you just don't decide that I'm going to do it every 3 months, I'm going to do so many numbers. You've got to get the right fit, and we are on the lookout.
But going back to that whole point on margins, I'm going back to it again because your peers are telling us a very different picture. You're of the view that the margin pressures are not that acute. Am I right?
I wouldn't say, you're absolutely right about the beverage business. I think margins are going to improve. On the foods business, we do see pressure, and we are working through trying to figure out ways to mitigate that pressure.
If you look across your portfolio, how much of your business you would say currently is at a transformational stage, and how much of your portfolio will only benefit because of the cyclicality?
I would say, Nikunj, broadly, the consumer products businesses which are there, which are added into my top line, mostly packaged beverages, foods, etc., I think are in a steady state, this thing, and we've got to continue to grow from here, especially the foods portfolio. The ones which will get the advantage of COVID being behind us and business as usual coming back very quickly would be the 2 out-of-home businesses that we have, and both in India, the Starbucks joint venture as well as the Narishco business. Now, Starbucks, we are already seeing the uptick. So September, the month of September this year versus September of 2019, same-store sales was about 94%. So, I mean, business is coming back to normalcy. Narishco, like I said, we've got, yes, there is the out-of-home coming back, but we also got geographic and portfolio opportunities. Year to date, up by 107%. I think these are the 2 businesses that we will really take off with the COVID being behind us.
Now you've given a forward guidance in terms of where you want your return ratios to go, but given that this entire change in terms of raw material pressures, how cost escalations have happened across all commodities, will your path to reaching double-digit return ratios, will they get challenged?
I would say we are slightly behind on the return ratio front, but Nikunj, the essential piece is make sure that we get growth into the business. And like I said, now we've delivered 6 quarters of growth. So that is the one primary factor. Second factor is efficient deployment of the cash that we have to make sure we are creating more opportunities. That is work in process. Overall, we did have some ups and downs. Like I said, last year, the tea business, ups and downs. Right now, we're seeing a bit of pressure on the food business. But overall, I would say slightly behind, not significantly behind on improving the return ratios. Over a period of time, we are extremely aware that the return on capital employed or return on equity for Tata Consumer lags its peers. And we are aiming to keep it on a upward cycle to make sure we're catching up.
टाटा कंज्यूमर के सुनील डिसूजा बात कर रहे थे निकुंज डालमिया से, और वो बता रहे थे कि 2700 करोड़ जो कैश ऑन बुक्स का उसका इस्तेमाल किस तरह करेंगे. अभी तो ऑफ कोर्स बिजनेस उनका अच्छा चल रहा है, थोड़ा कम प्रेशर है उनके मार्जिन्स पे कंपेयर टू अदर सिमिलर कंपनीज. चलिए छोटा सा